Anti-money laundering, AML, represents a critical framework within the financial and legal systems worldwide aimed at detecting, preventing, and deterring the laundering of money. Money laundering is the process of making illegally gained proceeds appear legal by masking the origins of the money, typically through complex sequences of banking transactions or commercial activities. The importance of AML measures cannot be understated as they help maintain the integrity of the financial system, reduce financial crime, and promote a more stable and transparent economic environment. To understand AML, it is first necessary to understand what constitutes money laundering. At its core, money laundering involves three basic steps. Placement, introducing illicit funds into the financial system, often through small deposits to avoid detection. Layering, disguising the origins of the funds through a series of complex transactions and bookkeeping tricks. Integration, integrating the now disguised money into the economy through legal channels, making it appear as legitimate income. Criminals use money laundering to process funds generated through a myriad of illegal activities, including drug trafficking, terrorism financing, extortion, corruption, and fraud. The objective is to use the laundered money without drawing attention to the underlying activity or the individuals involved. AML efforts began to take shape prominently in the 1980s with the recognition that financial crimes could serve to fund and perpetuate criminal activities and undermine the financial institutions themselves. The Bank Secrecy Act, BSA of 1970 in the United States, laid early foundations by requiring financial institutions to assist government agencies in detecting and preventing money laundering. However, the real catalyst for today's AML standards was the formation of the Financial Action Task Force, FATF, in 1989, which established a series of recommendations that are now the international standard for combating money laundering. An effective AML compliance program is fundamental for financial institutions and other regulated entities, such as casinos and luxury goods dealers. These programs focus on the following key components. Customer due diligence, CDD. Knowing your customer, or KYC, is a critical element. This process involves verifying the identity of clients and understanding the nature of their activities to assess money laundering risks associated with that customer. Transaction monitoring. Continuous monitoring of customer transactions to identify patterns that might indicate money laundering activities. Reporting suspicious activities. Institutions must report transactions that might signify money laundering, such as those which do not fit a customer's usual pattern of activities, to the relevant authorities. Record keeping. Financial institutions are required to keep records of transactions and customer information for a period of time, typically 5 years. Due to the international nature of modern financial systems, money laundering often involves cross-border transactions. This global dimension makes international cooperation essential in the fight against money laundering. The FATF leads this effort by setting international standards and promoting effective implementation of legal, regulatory, and operational measures. Countries that fail to comply with FATF standards may be subject to restrictions or placed on blacklists, leading to economic sanctions from other nations. Conversely, adherence to these standards fosters a more secure investment environment, improving international economic relations. Despite the advancements in AML strategies, the rapidly evolving pace of technology poses new challenges. Cryptocurrencies and digital payment systems offer new avenues for laundering money, which regulatory bodies struggle to monitor effectively. Furthermore, the integration of these technologies into the global economy introduces layers of complexity in tracking the flow of funds. Artificial intelligence, AI, and machine learning are being developed to identify patterns and anomalies in large datasets more effectively than ever before. This technology can predict potential money laundering schemes by correlating data points that would typically go unnoticed by human analysts. In conclusion, anti-money laundering is a dynamic field that adapts continually to new threats and technologies. It plays a vital role in securing the global financial infrastructure by preventing the flow of funds that would otherwise enable criminal enterprises. As the methods of laundering money grow more sophisticated, so too must the measures to combat them. It is a global challenge that requires the cooperation of nations, institutions, and individuals alike to ensure a stable, transparent, and robust financial system for the future.